Hello, Adam Zaghloul here, Vice President Strategy and Planning for NTG Clarity. We just released our first quarter earnings report for 2024, and the full reports can be found in the description below, but I want to talk about a little bit of the highlights in this video. So Q1 2024 is the sixth consecutive quarter that we've seen record-breaking revenue growth. Revenue this quarter is up 92% to $11.75 million compared to the first quarter last year. And the bottom line profits at $2.37 million is up 273% from first quarter 2023, but it also is more than the profit for the entire year of 2023, and we're just in Q1 right now. Behind this growth is huge growth in the economy in the Kingdom of Saudi Arabia. Now, Saudi Arabia is where the majority, more than 80% of our business comes from at this point. And they're undergoing a huge digital transformation right now. There's a big push, part of their economic development plan titled Vision 2030, to diversify the economy away from the oil and gas cycle and invest in things like digital transformation, artificial intelligence, infrastructure, tourism, sports and entertainment. All of these things will need huge digital transformation, huge software development infrastructures to help support them. And NTG Clarity, being in the business for more than 30 years, operating in Saudi Arabia for more than 17 years, is in a prime position to take advantage of all of this growth. So let's take a look at a few of the numbers from this release. So revenue, as I mentioned, is up 92% this year, up to 11.7 million, up from 6.1 million in Q1 last year. The gross margin is $4.5 million, which is 39%. That's up from 37% back in 2023, but it's especially noteworthy because a lot of investors were really interested in the gross margin. Coming out of our year-end release for 2023, it was a little bit lower than maybe a lot of investors would have expected at 33%. I talk a bit more about this in my interview with Cameron from Common Sense Investing. I'll put a card to it here. But we talk about the factors that went into a temporary lower than expected gross margin for 2023. And now that we're here in 2024 Q1 with a healthy 39% margin, up 2 percentage points from Q1 2023, I think that things are looking good. Let's take a look at the bottom line, which is total comprehensive income for the period. $2.37 million for Q1 2024, which is about 20%, compared to $637,000 for Q1 2023, which is about 10.5%. This is a 273% increase year over year, which is much more also than the 92% revenue growth that we saw. When we take a look 2 lines up at the net income from continuing operations, we see $2 million, which is just about 17%, a little bit higher than that, compared to $1 million, which is also a little bit higher than 17%. This increase is much more in line with the 92% increase in revenue that we saw. So a big difference with the bottom line must be in our exchange gain on translation. This year, Q1, $346,000 gain, as opposed to a $450,000 loss in Q1 of 2023. Now, I talk about this foreign exchange gain a lot in that same video with Cameron from Common Sense Investing. It was a great discussion. Definitely check it out if you haven't already. It goes over a lot of information about our company. But the gist of it is there's a currency devaluation situation going on in Egypt. And this line is basically a measure of our foreign exchange gain or loss when consolidating operations from Egypt with the rest of the company in Canada. So because of management's decision to treat Egypt as more of a delivery center for software development services and products and less of a sales center, we're actually able to pay our expenses in a devaluing currency while collecting in stronger currencies like the US dollar or the Saudi Riyal, which is pegged to the US dollar, and actually manage to make the best of a devaluing currency situation and make a little bit of money on foreign exchange. So when it comes to why we jumped from 17% margin to a 20% margin, foreign exchange and our foreign exchange strategy definitely plays a big part. When we take a look at earnings per share, we're up at 6 cents per share compared to 0.004 cents back at Q1 2023. Now, even when you take into account the 5-to-1 share consolidation that we did back in March, we've still tripled our earnings per share compared to Q1 of 2023. Taking a look at the highlights from the balance sheet, we've managed to put on more than $2.5 million of assets compared to last year at the end of 2023, while keeping our liabilities relatively consistent. Especially on the liabilities front, a lot of investors are interested in the long-term debt that we have on our balance sheet. But this quarter alone, Q1 2024, we've managed to pay off $250,000 of long-term debt. So a lot of improvements on the balance sheet are definitely to be had. And one other point that's definitely worth noting is for the first time since 2015, we have a positive working capital. So our current ratio is greater than 1. So a lot of improvement on the balance sheet, definitely. I think that gets at most of the highlights for Q1 2024. As we mentioned in earlier releases, we're targeting $50 million in revenue for 2024 at a 10% bottom line. So this release puts us well on our way to meet those targets. And I'm just looking forward to seeing what the rest of 2024 has in store for us. So feel free to let me know if you have any questions or comments. And I'm looking forward to the next one. Thank you.